Here's the money shot, kids. This is the chart that you need to just sit back, chill the out. I'm just going to let you marvel in that beauty. You see it? Liquidity is everything, kids. Bitcoin is exactly following total liquidity. And it says we keep going into the end of the year.
Crypto investors have been on a real roller coaster ride these past few days. At the start of the week, Bitcoin showed strong bullish signals, soaring past $69,000 per coin, a level we hadn't seen in months, sparking a wave of euphoria across the market. But things took a sharp turn. Bitcoin's price began to drop just as quickly, fueled by new waves of FUD. One of the main rumors suggested that the US government had launched an investigation into Tether, the issuer of USDT. However, this news was later confirmed to be false. Alongside these rumors, a new escalation in global conflicts added more uncertainty, causing Bitcoin to slide further, now hovering around the $66,000 mark as we record this video. Yet, this is just another one of the many shakeouts that crypto holders are facing, designed to push retail investors out of the market before the next major rally. The manipulation is clear, and many of us know that this is a strategy to delay the inevitable surge. And when that surge comes, it's expected to be massive. Bitcoin could easily surpass the $100,000 mark, a target that renowned investor and market analyst Raoul Pal also supports. According to Pal, the key in times like these is to zoom out and focus on the bigger picture. He reminds us that Bitcoin and other cryptocurrencies have historically performed well during periods of liquidity expansion. In a recent talk, he shared several charts supporting his thesis that the crypto market is on the verge of explosive growth in the coming months. We'll be breaking down these charts and Pal's insights in this video. So, if you want to understand why Bitcoin is on the brink of a major breakout and how far it could go in 2024, make sure you stick around until the end. But before we dive in, please hit the like button and subscribe if you enjoy content like this. It's completely free, and you can unsubscribe anytime if it's not what you expected. Thank you. And now, let's jump right into the video.
Let's talk about drama. I'm going to share a screen, Nicky boy. I'm going to go with this one. So here's my trading view of drama queens. Drama queens are, oh, the market's going up, the market's going up, the market. This is Bitcoin, by the way. Oh my God, it's getting near 70,000 on Sunday night. Really? Who do you think is buying on a Sunday night? It's you lot at home drinking your Bud Lights. Stop doing that. Sundays, there's no volume on a Sunday. Guess what? Market opens, it pukes again. And then it's, oh my God, it's going to zero. And there's a bunch of Twitter posts saying it's going to go to 48,000. Does it go lower? Maybe. But really, you guys have got to stop using hourly charts. What you actually need to do is very simply zoom out. Zoom the out. Look at that. Does that look like a terrible market? No, just consolidation. Does this recent drama move look like drama? No, it's barely touched the high from a few weeks ago. There's nothing going on, kids. Stop thinking the world is changing, but the world will change soon. The other thing to zoom out on, if I find the right chart, this is a lovely chart for all of you looking for altcoin season or the yellow fruit zone. What we have here is total market cap excluding the top 10. Now, what's so lovely about this is it's just beautiful how this chart works. Consolidation, election year, boom. Consolidation, election year, boom. Consolidation, election year, fruit. Now, when I zoom in, we've got some potentially inverted head and shoulders. Could we come back down and fell head and shoulders and come back? Sure, we can. I don't really care. But I'll show you why I think it's yellow fruit season. Most of the charts are similar. Actually, Solana's been different. It's actually been, sorry, there's my fake DMARC indicators on here, so it's a little bit messier. But Solana has been trying to break higher. But again, it's not really going to make much progress until the big daddy Bitcoin does it. But again, if you look at the hourly chart, here's Sui on an hourly chart. It's like, oh my God, the horror. It just feels awful. And really, it's barely doing anything, really. It's just this. If I go, where's the? Sorry, I've got something over my screen here. If I go to the daily Sui chart, we had this. That's it. That's all of the price action. Literally, guys, calm down. Calm down. Everything is fine. So I've been using more wick-off reaccumulation patterns. I never used to use them. I didn't really know about them. But they've really worked in crypto. I use this wick-off reaccumulation pattern. I used it for Bitcoin recently as well. And this continues to play out. You know, I thought that Bitcoin had reached it here when we reached the point at the bottom. And then it's been basically following this pattern. And Marty's been updating every day. Does it follow it? Will it follow exactly? I don't know. But generally, around here, soon, we should get back up to start testing the 70,000 and above, that supply zone, and eventually break as we start heading to the election. The standardized wick-off pattern is here. I think this is the highest probability outcome of what we're seeing. I know there are other people calling for lows, other people screaming straight up. This feels like it's probably the right thing.
Wick-off accumulation is a crucial concept in trading, breaking the market cycle into 4 distinct phases: accumulation, markup, distribution, and markdown. The accumulation phase occurs when smart money, whales or institutions, begin to acquire an asset at low prices without drawing too much attention from the rest of the market. They do this gradually, preventing any sharp price movements that might signal others to follow. As demand starts to increase, the chart begins showing higher lows, indicating growing strength in the asset's price action. Recently, smart money and institutions have been quietly and strategically accumulating massive amounts of Bitcoin, particularly through new BTC spot ETFs. They're not only positioning themselves to benefit from potential price increases, but also safeguarding their wealth from the rapid devaluation of fiat currencies. Well-known market analyst Marty Party has shared his thoughts on this accumulation pattern for months. He breaks down the accumulation process into 5 phases, labeled A through E. And right now, we're sitting in phase D, on the edge of the final phase. This is where things are about to get exciting. According to Marty Party, the trigger will come with the U.S. presidential elections, and he predicts that November will bring the long-anticipated markup phase. This is when prices begin to rise sharply, signaling that the big players have finished accumulating and are ready to spark a rally that draws in retail traders, only to take their money. This is the phase Raoul Pal calls the banana zone, the most thrilling and explosive stage of every bull market. And it's just about to begin. So now, let's jump back into Raoul Pal's analysis and dive into the key data points to ensure we are ready for what's coming next.
Firstly, Julian's putting this chart up of the Bitcoin halving versus previous ones. That's from the halving date. Underperforming now. It's so normal. Everything going on is exactly what it should be doing. We should be getting pretty close to the acceleration phase. The wiggles are different. The pattern is the same, right? Next chart. This is the GMI total liquidity index. That's private and public sector liquidity. You can see it does these wedge patterns. Remember that alt season chart and the wedge patterns? Same pattern, by the way, kids. Oh, it's liquidity. Yeah, the Everything Code told you that. I told you all of this stuff. And every time it happens, every time it breaks out, which it's done, the market breaks out. So exactly the right timing. Everything looks good. This, I think, is the fucking money shot. You know, we produce charts that everybody else in the world copies. Honestly, a global macro investor and in Real Vision Pro Macro, we do more macro crypto research and more in-depth macro crypto research than anybody else in the world. We have definitely changed the landscape of how people think about this stuff. Here's the money shot, kids. This is the chart that you need to just sit back, chill the f*** out. I'm just going to let you marvel in that beauty. You see it? Liquidity is everything, kids. Bitcoin is exactly following total liquidity. And it says we keep going into the end of the year. Could be something to do with the yellow fruit. I don't know. Who's to say that? We don't mention it. We don't talk about it. We summon it by wearing it. We'll come on to that in a minute. Okay, so that's that. Julian showing the same chart that I showed earlier is like, chill the fuck out, people. This thing is ripe. Weekly Bollinger Bands, about as tight as ever been. Every time that happens, yellow fruit tend to occur. They tend to ripen pretty fast. I'm flipping through charts. The chart that we did have in the past that is not working perfectly is like ETH this time versus last time. The Bitcoin version is actually better. The ETH version, yeah, ETH is trading like a piece of shit. I think it's just lost its narrative. I actually think they've overbuilt blockchain capacity for the demands of the chain via the layer twos. Overbuilding blockchain capacity, I think, was a calculated move in terms of a longer term future for the chain. I actually am not a long-term negative over it. I just think, yeah, they've got excess capacity right now for the market. ETH is the big daddy of smart contract platforms. I mean, there's still all the talent, all the developer talent, applications, the finance sector will build on it. It's all still there for ETH. The story's still there, but I think they've built a bit of excess capacity as they've scaled it using Vitalik's scale model, and we'll find out whether it was right or wrong to do that. I actually think it might work. I think it might pay off, that by doing what they did today means that it's a multi-trillion-dollar blockchain in the future. The other one's a killer chart, is ETH today versus Bitcoin back in the previous cycles. It's just like, it's following it so beautifully. It kind of looks like it's in catch-up mode to come. Bitcoin ETH, generally directionally right? There's nothing really you want to concern yourself over. Presidential election years, nobody really cares who gets elected because the market goes up.
Raoul Pal's message is crystal clear. Don't let the noise and market manipulation scare you. Hold your coins with long-term conviction and get ready to become filthy rich once the much-anticipated banana zone arrives. It's getting closer every day. And regardless of who wins the elections, the market is going up. So make sure you don't miss out. What about you? Do you agree with Raoul Pal's outlook? Let me know what you think down in the comments. If you found the information in this video helpful, please don't forget to hit the like button and subscribe for more content like this. Thank you for watching. We are Wealth Wizards, wishing you an amazing day. Goodbye.